During my many years of trading, I have noticed a lot of traders using simple indicators like the MACD, the stochastics and the RSI in completely the wrong way. So what we're going to do in this mini series is we're going to deep dive into some of the most popular indicators there are on the market, and I'm going to show you how to use them the correct way so we can maximize them to their full potential so we can make some profits. So enjoy today's video. A stochastic oscillator is a popular technical indicator for generating overbought and oversold signals. It is a momentum indicator that was first developed in the 1950s, and it uses an overbought levels of 80 and 20. However, it utilizes a 0 to 100 bound range of values, meaning the overbought levels of 80 and 20 can be changed to whatever value you want between 0 and 100. The way it works is it measures the momentum of closing price. So basically it uses 2 period moving averages and it is measuring the closing price to gauge the momentum in a trend. So I've seen many different traders using the stochastic oscillator in many different ways, but really there's only one way you can use this indicator. Now on my charts in front of me, I have the stochastic oscillator in front of me, and as you can see, it is very volatile. It's overflowing all of the time, going overbought, oversold, overbought, oversold, and that is really why some traders don't like it or can't master it and trade it successfully, because it's very difficult to filter out the setups or valid setups. Now let me explain to you how we can use this to our full potential. So as a rule of thumb, when the stochastics goes overbought, it is considered the market's overbought, overextended, and price will go down. But realistically, that doesn't always happen because as you can see here, the stochastics has gone overbought. However, price hasn't. It just continues up like this here. And again, you can see how the stochastic's gone overbought and yet price continues up. Now, this is why some traders don't like it. Now, the stochastic oscillator is good for one thing and one thing only, and that is measuring pullbacks in a trending market. Out of all the indicators I have ever used throughout my many years of trading, the stochastic oscillator is by far the best for measuring pullbacks in a trending market. So my charts in front of me, I have the 1 hour charts and I have a 50 moving average, and let's just keep it simple. As a rule of thumb, if price is above the moving average, it's an uptrend. If price is below the moving average, it is a downtrend. If price is kind of ranging in between the moving average, price is going sideways. Now, as you can see here, as price trends up like here, you are always going to get a pullback in the market. Now, look how the stochastics captures pullbacks in the market perfectly. Uptrend, pullback, the stochastics goes oversold, price goes up. Okay, and same again. We get a pullback in the market just here and the stochastics goes oversold. This is by far the best way to trade this stochastic oscillator. I've seen so many traders in the past trying to trade kind of an overbought, oversold, you know, selling when it's overbought, buying when it's oversold, and that will just not work. You will get burnt out doing that here. However, if you are a trend trader, let's just have a look here. We've got an uptrend. Let's find a trend here. Here we go here. We have an uptrend, okay? Price is above the moving average. And let's look at every time we get a pullback in the market. So uptrend, pullback, the stochastics goes oversold. We buy price. Price goes oversold. Again, the stochastics goes oversold here. So we can see how we can use this to our full potential. And again, we have a nice uptrend movement here, but the stochastics hasn't really gone oversold on this uptrend here. So that wouldn't be classed as a valid setup. Let's try and find you a downtrend. Here we go. We have a nice bit of downtrend here. And again, follow price, downtrend, pullback, stochastics goes overbought. Hold on. I'm doing that right. Trend down, pullback, stochastics goes overbought. Trend down, pullback, stochastics goes overbought. Trend down, pullback, stochastics goes overbought. So you can see here now how we're using the stochastics as our edge to enter the market. Now, as a rule of thumb, the stochastics oscillator is perfect more on the higher time frames. It doesn't really work on the 1-5 minute time frame because it goes volatile. It's very volatile. It goes overbought and oversold extremely a lot because it's measuring the close of price. So if you're on the 1 minute time frame, for example, price is moving literally every minute, every second. So it will constantly go up, overbought, oversold, overbought, oversold. So to maximize the stochastics oscillator to its full potential, you want to be measuring pullbacks or using it to measure pullbacks on the higher time frame. So let's give an example now on how we can use this to enter trades. So on the left screen now, I have got GPUSD on the 5 minute time frame on the left, and I've got GPUSD on the 1 hour time frame on the right. Now on the 1 hour charts, I've got a 50 moving average, and I have the stochastics oscillator at the bottom. Now if we just press play on this simulator here, okay, let me just try and find you a setup. I thought that was a setup here. Was it a setup? Here we go here. Great. Okay, so as you can see here, let's just keep trading simple, and this is how you should keep trading. Very simple. We are below the moving average, so we consider this a downtrend. We now have the stochastics oscillator going overbought. So this tells me what? It tells me that price is in a downtrend, and now the stochastics oscillator is measuring a pullback in price. So as you can see here, we have a trend down, we have a pullback. And if we just use a bit of price action, we can see on the 1 hour charts, we are at an area of resistance. So you can see here why we have got a pullback in the market. And we can see now why the stochastics oscillator has confirmed that the market is overextended, it's overbought, it's at an area of resistance, and price is in a downtrend. And we have a downtrend and pullback motion. It's quite simple, isn't it? Just using a simple stochastics oscillator, it is filtered out all of the noise on the charts. We're now at a resistance, we're now at a pullback, we're now in a downtrend. So we wouldn't just enter a sell at this level, okay? What we want to do is get in at a better price. Now, I haven't simulated this. I generally don't know if this is going to work, but what I'm going to do is I'm going to mark up the previous low in the market here. Okay, obviously this is going to be the previous high here. And what I'm going to do is realistically wait for that price to, I'm going to wait for this low to be broken, a change of character if you want to say that. So I'm going to go to the 5 minute charts now. I'm going to wait for this area to be broken. Okay, we've just tapped into it there, but obviously that's not enough. I want to see, oh, here we go here. Right. Okay, I'm going to take a sell just there. Hopefully, yeah, I'm going to take a sell just here, okay, because now I've got a change of character on the 5 minute time frame. We've had, if you just zoom out now, you can see on the 5 minute time frame this big pullback in the market, and that big pullback is the 1 hour pullback. So we're going to take a sell here. And what I'm going to do is I'm going to go for, I don't know, a 15 pip stop loss. I'll go for a 50 pip take profit. Okay, so nice little tight stop loss, big risk reward ratio. Hopefully we win this trade. I'll go to the 1 hour charts. Like I said, I don't know if this price is going to win. Nice. Nice, beautiful. Okay, so let's repeat that process again. Okay, that's actually a really good setup. Okay, let's repeat that process again. So let's see what happens here. Now we see here, this is the interesting part. You see on the 1 hour charts, you can see how the stochastics has gone oversold. And normally what a lot of traders would do is they'd mark up this area of support, and they'll go, oh, buy the market because the market's gone oversold. The stochastics has gone oversold. We're at a support line. Let's buy the market. But now I've explained to you that stochastics oscillators are not good for measuring overbought and oversold and trying to capture trend reversal. This is not a trend reversal indicator. It is for measuring pullbacks. So realistically, what we want to do now is wait for a pullback in the market. We know it's a downtrend. If this, yeah, you can see here, we've now broken this support. We've created a lower low. It is a pullback in the market. I mean, it is a downtrend in the market. So what we would want to look for is something like this here. Same again, we come, I didn't know this was going to happen, but nice. We now know that we now know in a downtrend, again, the stochastic, notice how the stochastics has gone overbought here, okay? So what I'm going to do, same again, is I'm going to go down to the 5 minute time frame. I'm going to mark up this area here. I'm going to wait for this area to be broken here. So let's see if this area gets broken here. Okay, what I'm going to do is I'm going to... Okay, right, this is going to be interesting. You see what I now have on the 5-minute time frame? I now have a lower low and the previous low and lower high. So now I've got a change of character. So again, what we're going to do is we're going to take a sell trade here. What I'm going to do is I'm going to go for a tighter stop loss. Again, I hope this works. We'll go for an 8 pip stop loss, 16 pip take profit. So again, we're going to go for a nice tight stop loss, big risk reward ratio. Hopefully this trade wins. Don't stop me out. You've stopped me out. I might enter this trade again. Hopefully, oh, that's annoying me. And then price drops. That's really annoying me, okay? Going back there, maybe I should have used a wider stop loss. Let me just go back to here, right? Because obviously, you know, I'm not gonna take a trade, but realistically, what we should do on this one is, do we get a little pullback of, do we get a retouch of this? Yeah, see here? See the retouch here? This is realistically where I should be entering again, not where I previously entered, because you got a break and retouch just there. Look at that there. So realistically, we should be entering here again. So let me just take another sell trade here, another sell trade. Let's see if this one wins. Yeah, well, again, we lost the trade, right? We lost the trade. Let's just accept it. We lost the trade. Let's find another setup. Okay, so same again here. We will carry on the trade. Okay, so same again. We're going into a downtrend. Okay, so here's the downtrend here. And again, look at this minute. Let's see how we pull back in the market. Look at this here. Look at this here. So again, downtrend. The stochastics has gone overbought. So what does this confirm to us? Downtrend, pullback. So let's see if we can get another perfect entry. Another perfect entry on this one. Let's see if we can get another one. So what I'm going to do is I'm going to mark up the previous low and high. So I think the low is just here. That's the previous low here. The previous high is going to be at the top here. So there we go there. Let's see if we get a, come on, come down. Yes, there we go there. See that break and retouch? Break and retouch. Good. Now let's take this sell here. What I'll do this time is I'm going to put a wider stop loss. And we'll go for a 1 to 2. So a nice little 10 pip stop loss, 20 pip take profit. Let's see if we win the trade. Nice. That's better, isn't it? That's better. Okay. So nice. We've nice done that one there. Beautiful. So let's carry it on again. Let's carry it on. Let's do one more setup here. Okay. Downtrend. Okay, so I'm not actually going to take this sell here, okay? I'm not going to take this. See how the stochastics has gone overbought here? I'm not going to take this sell because this is not a downtrend. Why is it not a downtrend? Because we have an area of support. See that there? So this is no longer a downtrend, okay? So we're not taking this sell here. This would be stupid. I've got a funny feeling here we might actually go into an uptrend. Okay, we do here, okay? So now price is consolidated. Oh, here we go. Here we might, yeah, there we go. There we just broken here. And here we go here. So now, hold on here. If I go back to here, let me go back to the 15-minute charts. So now we have confirmed just, there we go there. That'd be better. Here we go here. So now we've just confirmed that we're going into a downtrend. Okay, so we've now created a lower low. You see how I marked up the previous low? I was hoping for a break below, and we've done that. So we're now confirmed we're in a downtrend. We've now got that pullback in the market. The stochastics has confirmed that. We're below the moving average. So what we're going to do is we're going to scale down to the 5-minute time frame. And we're going to look for a change of character. So same again, I'm going to mark up the previous low, which is here. I'm going to mark up the previous high, which is going to be here. And we are going to take a sell trade. Just wait for that break below there. There we go there. Do we get a retouch? I think that was it just there. That was it just there. Just to be careful, I'm going to take a sell here. I'm going to put a wider stop loss. So again, we'll go for... I think we'll go for a 12 pip stop loss on this one, 24 pip take profit. Okay, so we'll take a sell there, 24 pip stop loss, 12 pip stop loss, 24 pip take profit. Do we win the trade? That that there is what I was waiting for, an actual retouch of this level. That's why when I took that sell here, I was a little bit cautious. Was that a break and retouch? That's why I put a wider stop loss in. Sometimes you're not going to get a perfect entry point. Sometimes you're not going to 100% predict the market. That is fine, right? We're not all experts. We're not all ninjas on the charts and going to get perfect entry points every single time. People on YouTube might make it look like that's possible, but believe me, it's not. Okay, so let's see what happens here. Hopefully we win this trade. I'm just waiting for price to come down. Nice little sellers coming into the market. Here we go here. We're slowly coming down here. Come on, come down. Come on, come down here. Don't. That is a little bit annoying. What I would normally do here is I would probably close that trade off just there. That's probably realistically where I'll close the trade off there. Just want to see how many pips that is made, because we had a 12 pip stop loss. Yeah, that is really unlucky. I got to 22 pips. 22 pips, but you can see here, if I go back to probably the 1 hour charts, it looks like it's getting stuck at this level. So realistically, that's probably where I'd close it off there. But yeah, realistically, that is where I would close it off. So yes, I hope you enjoyed that video. That is a deep dive in the Stochastic Oscillator and how to trade it successfully. Obviously, I was a bit rough doing that because I don't trade with the stochastics. I trade with my indicator, the binary destroyer. But yes, that is how to trade the Stochastic Oscillator successfully. So I hope you enjoyed today's video.